When Brian says or asks whether OPEC has lost its mojo, has it?
I don't think so. If you look at all the things that are changing in the world, one of the surprising constants is OPEC. We've tried to write it off many times, but it's around. Right now it has a sub-project called the Cooperation of Saudi Arabia and Russia on oil pricing and supply, but it will, as it always does, find its way through this because those in OPEC need higher prices to keep going. The rest of the world would like lower prices to keep gasoline prices low.
What do they need? How high do they need?
Very difficult to say. I think they're happy around about $70 a barrel, I would think, is the moderate. This is Brent now, not WTI.
Yep. So does a cut today get them there?
It might. It all depends, I think, as everyone knows, is what's happening to demand. And will these trade changes, will the changes in globalization, in supply chains, actually affect demand? Clearly it will affect demand in some ways. It's counterbalanced by, of course, more people entering the energy-consuming markets around the world. There's still a lot of people who don't have enough energy in the world, and as they get slightly richer, they demand a bit more.
You mentioned how things changed, but OPEC has at least stayed relatively steady. But one thing that has changed here in the United States, of course, is the huge production that we have, certainly out of the Permian, the Bakken as well, at certain prices. How does that affect things going forward in terms of the way OPEC looks at the world?
Well, it definitely affects it because up until now, the Permian and the other shale basins have been very responsive to price. So they can turn up, turn down, and they've actually limited the price rises by as the price goes up, people produce more and vice versa. But I think it's worth stepping back and looking at this more than just over the next 3 months. US is a very big oil producer, biggest in the world now, but it's just over 10% of world supply. There are two other places, 10%, Saudi Arabia and Russia. So what the US does is important on the margin, but long term, we're going to have to figure out where the oil comes from, other than from the shale, to give enough oil for the world to keep going. And that requires investment, which is not forthcoming at the moment.
Investment in more shale or
no,
other types of...
investment in all sorts of developments around the world, whether it is in Alaska or Angola, and all points in between. The conventional oil still needs investment, and we still need to produce it because that's most of the world. This is an important brand new basin, the Permian, if you will, Permian revisited, but there's a lot more needed in the world.
Is that why you're playing in Mexico upstream business?
That's correct. So we have a company which we've put together, which is a pretty nice company working in different parts of the world. It's going to be merged with a bigger company. We're going to make the biggest independent oil and gas producer in Europe. It will be the biggest, around about 800,000 barrels a day. It's just gone into Mexico, which is where we have to invest to get the oil out. It's exactly what the new president of Mexico said, is he wants to see people investing to get production, not speculating to get money. So that's what we're going to do. We're going to be investing to get a lot of production out of Mexico.
And when you think about the long term, then you're bullish, so to speak, on the commodity itself in terms of the need for it, the use for it, and the rising demand for it, I guess, with a growing world population that is going to have access to it.
Generally, yes. I think the rate of increase of demand for oil will moderate over time because there are other ways of getting your automobiles around the streets, and they will all come into play over time. We tend, I think, in my experience, to overestimate the speed of impact of things that change things like automobiles and generally the way in which energy is used. It takes time, but we'll be needing oil for a very long time.
Reminds me of something that's been written in the past week. 5 years ago, there were all kinds of promises of drone delivery that we'd be seeing by now. And that curve is longer than we thought then, and you're saying the same thing about EVs, I assume.
I think so. You can't rule it out, but absolutely not rule it out, because we always improve technologies. But technology takes time to be improved to the point where it's basically shrink-wrapped. You don't want to buy a car that's experimental. Nobody really wants to do that. We want to get in an automobile, turn it on and move, and we want to get to places where we can fill it up with whatever we need, and we don't want to hang around waiting while it fills, and we want to be safe and secure. It's a great piece of technology, but it's shrink-wrapped.
You know, I'm curious as to your perspective, given how long you operated in Europe, where there seems to be more of a focus, certainly on ESG, as we call it, and on climate change. How important is that? How much, in your current role even, do you think about sort of your changing investor base in terms of the way they view both the investment and the world at large?
So I think of two things. Certainly Europe is taking more action in this area, but it's only Europe. The rest of the world is in a very different place. Look at the CO2 statistics, which is based on growth in China, India, and the United States.
Right, we're more than ever this year again.
Absolutely.
After last year.
So I think the two things. One is we need to make sure that we don't, when we produce gas, and we'll be producing 70% of our production in gas, we don't let it leak into the atmosphere. Methane leakage is a really bad idea, very damaging to the environment, and most big oil companies are now taking action in that, and that's very important. The second is recognizing that we need oil and gas for the long term. We have to do something which sounds contradiction. We have to take the carbon out of hydrocarbons. And the way we do that is capture it and store it. Carbon capture, storage, carbon capture and use are things that we should be spending a lot of money on getting right. And that will happen over time. Right now, not enough.
Finally, we've been cautioned to watch 50 as a price at which corporate credit risk gets interesting. Is that do you share that view?
I think we have to get a little bit lower than that, I'd say. A lot of people's break-even has come down because one of the most important things to remember is in the oil and gas business, it's not just price, it's cost. And you've got to get cost down to the lowest possible level. I think the industry generally has responded well in that. And so this is different from the price collapse of the past. You're down to a different cost base, and that cost base is staying there for the time being.